Thank you so much, President Lagarde. Good also to see you back in the Parliament. Let me start out by sharing a concern that the situation on the financial markets right now is alarming, and from our perspective, despite all differences also to the situation in the US, we can't be sure that the current developments in the banking sector aren't turning out to end up being much bigger than what we actually can see right now, with also a lot of effects for the real economy, like, for example, also through higher unemployment. So my question goes on the link between the current developments in the banking sector and your monetary decisions on the other side. Last Thursday, you, President Lagarde, delivered on your promise of another large interest rate hike at 50 basis points. And at the same time, the American and Swiss banking crisis also has effects on the global banking system by banks handing out less loans or at a more expensive rate, at least. So these effects also have an economically comparable dimension to further significant tightening of monetary conditions. So having those two developments in mind, I would like to ask you if the current developments also in the banking sector are changing your analysis and expectation for the economic outlook in general, and if you think that a recession is more likely now with the newest developments we are experiencing on the banking sector.
In the face of that, we obviously saw the same financial tensions that you have observed. We are monitoring those tensions very carefully. We do that on an international basis, of course, but we also do that in the euro area banking sector. And we do so from a euro area financial stability perspective, also looking at individual banks as part of the regular supervision of the ECB banking supervision. Needless to say that I work in close cooperation, but with appropriate respect for the various competences in the various areas of central banking on the one hand, supervision on the other hand. But we work closely and listen to the developments and the assessment of Chair Enria, who luckily will actually be with you tomorrow. So there are quite a lot of questions that have to do with the euro area banking sector that I'm sure you will be very keen to ask him and that he will indeed address. But we regularly assess banks' readiness to manage risk. Last year, we looked at their ability to manage interest rate and credit spread risks. We regularly conduct stress testing exercises, and the result of the next one, which is ongoing actually, will be published next July. And we publish information on the capital position and liquidity of the banks. And we are very confident that the capital and liquidity positions of the euro area bank are very satisfactory, with significant capital ratio and liquidity coverage ratio way in excess of requirements. So that has led us to reconfirm again, and I'm happy to repeat that in front of you as the ECON Commission of the European Parliament, that we believe that the euro area banking sector is resilient with strong capital and liquidity positions. And as I have said, and I'm happy to repeat as well, in any case, we stand ready with our policy toolkit to provide liquidity support to the euro area financial system. And if the tools that we have in the toolbox were not enough, I know that staff is capable of providing the adjustment or the recalibration that would be needed in order to address any liquidity risk that we would see developing. Thank you.